Okay, there we are. Recording has started.
All right, welcome to week 3. All right, today we're going to just talk about numbers and financials. And of course, what I want you to do that is open up the chat window, because that makes total sense. And I only want one or two words in there from you, but not yet. So hold off there. So last week we talked about Tuesdays. One of the things I mentioned in that lecture was measuring. That it doesn't matter if you continue to just make changes, if you don't measure whether they work or not, then you're not really doing that process, right? One thing that every one of these businesses on this call has in common is that you all earn money, right? And if you don't earn money, you want to earn money. And so the question to you is, how often do you look at it? How far back do we have to go? If I said right now, and this is a hypothetical, just to make it clear, it's a hypothetical, it's not real. If I said right now that we're going to invest $500,000 in one of the companies on this call, but in order to be qualified to be in there, I need a copy of your financials. All right. Which financials would you say? Oh, sorry. And I need it by the end of the call. Right. So I need it in the next hour. So if I needed a financial report from you in the next hour, the question I have to you is, which financial report would you be sending me? Would you be sending me the report that's up to date from yesterday? So either type in the word yesterday or last week or last month or last year. All right. So Amanda is showing it off. And so she'd be last year. Last month, yesterday, and I want to see, it's 92 of these from you guys. So fess up and tell us where it would be. And I'm going to take a pause while you figure that out. Yusuf, send it to the whole crowd. You sent it to me instead. Okay, last year, last month, a couple yesterdays, but mostly it's last year so far, last 12 months. Good answer. I agree, Peterson. Yesterday would be great. All right, they're starting to flood in. Last year, last week, last year, last month. All right. So while you're doing that, I will actually take off the share screen and ask the question. How on earth do you know what to do this month in your business if your financials are from last year? So here we are, it's 10 days into May. And so if you know what happened in April, okay. And if you looked at what happened in April in the first week of May, that makes some sense. But if the last time that you looked at your financial reports was January, and here we are 5 months later and it's May, and you have really no idea what happened this year, or you have some idea, but you don't know the details of what happened. How are you supposed to optimize this year? Right? What you need, and Amara puts in a good question, which is, depends on what you want to measure. All right, so what I'm going to show you a whole bunch of different things to measure in terms of finances, but what you need to know is, are you doing better or worse than last month? And ideally, why? And if so, if better, great. How do you make that even better next month or next week? And if worse, great. What are you going to do about it, and how are you going to fix it? And if you're worrying about an annual cycle, we can go back to this idea of duration, right, or cadence. If your idea is, I want to do better this year than last year, I want to grow my business so that this year is bigger than last year, and you're looking at last year for the entire, if you're looking at 2021 for the entire year of 2022, then you'll know next January.
Toute l'année de 2022, vous saurez.
If you didn't grow, and it's 2023 by then, what are you going to do about 2022? You can't do anything. All you can do is fix 2023. But if you're looking at last week, and you're constantly comparing week over week and comparative weeks per month and weeks compared to last week, the equivalent week the equivalent week last year, then you have some chance to actually optimize this. What do you need to change in order to optimize your growth? Right. And I'm presuming everyone wants to grow. That's a common goal. What lever you change? What do you change in your business in order to grow? That varies from business to business. That might be price. It might be cost. It might be people. It might be logistics. It might be suppliers. There's lots of things that you might change that you'll have to figure out yourself. But one commonality that we all have is we want revenues to grow and we want profits to grow, or at least we want profit margins to stay the same. So I want to show you how long it takes to look up financials for my businesses. I'm going to start with my own businesses so that you can see what some real businesses look like. And they're over here in this piece. All right, so my nonprofit runs on QuickBooks. All right, it's the most popular online accounting software in the planet. It's reasonably cheap for an American company. It's a little bit expensive for some African companies, but it's the standard. So this is my nonprofit. It's called Realize Impact. Amanda's smirking. She's probably never seen these reports, but we're partnered together between this nonprofit and her nonprofit. And so one reason QuickBooks is most popular is because it's powerful, but it's also complicated. So it's just showing a dashboard of the last 30 days. We had $1 million come in. It's a nice size nonprofit. If I go down to reports, oh my God, there's so many choices of reports and the things that pop up. Which report do we want? There's 5 or 6 pages of reports. We want the statement of activity, which would be the income statement or the P&L. So we'll click on statement of activity. And it's going to default to the beginning of the year to today. But I was running this company last year. I'm not running it this year. So let's just go to the end of last month, because I know that's up to date, and hit run report. And there we go. That is the statement of activity for this year through the end of last month. And it took a minute or so. I didn't show you logging in. You have to log into this. So that takes a little bit of time too. So how are we doing? Well, we had $5 million of $5 million of income. Those are donations because it's a nonprofit. We earned a little money along the way, which is always good. So we had a total of $5.1 million. How much did we spend? Right? Key piece. Did you spend more than you earned? Right? This is a nonprofit. Of course, we're going to spend less than we earn. Maybe not all nonprofits are like that. We only spent $466,000, which is still a lot of money, but it's a lot less than $5 million. And so it looks like we had $4.6 million left over. We didn't. We invested all that money, or almost all that money. That's fine. That tells me how we're doing, but it doesn't tell you guys whether that's better or worse than last year. Right? So comparing things to last year is really important. So let's just go up here and change the report to last year, and let's compare years. And we run the report. And now we can see that all of last year, we brought in $7.4 million. And so this year we're doing well, because this year is just January to April and we're almost at that number. And unfortunately, it's not computing a percentage, but we could do that with a calculator. And in terms of expenses, we can just jump way down to expenses. We spent $2.6 million last year. We only spent $466 this year. So in terms of spending, you generally want spending to be down, right? So that's a generally good thing. And net revenue is about the same year over year. And we can go all the way back to 2020 and do the same thing. And I happen to know this data only goes back to 2020. And now we can see, oh, look, there's a progression of growth. That's good. Again, growth is generally considered good. Let's grow all the way down to expenditures. Oh man, we're spending a lot more than we used to back in 2020. But I know, because I run this company, that nobody was paid in 2020. Everybody was a volunteer. So of course we're spending more money now. That's it. There's tons of other reports we could pull up on here, but that's the key P&L. That's the key report that most companies would look at on a regular basis. Now, there's a whole bunch of things missing in here in terms of whether or not the business is doing well. We don't know how many donations that was. Nothing in this report tells us how many it is. Nothing in this report tells us what we actually did with those donations. This is not a good report in terms of, is the business itself growing on a basis of popularity or, the average size of the donation, because we don't know what the donations are. We don't have anything in this report on what we did with those donations, which is important to this business. So this is not the be all end all report, but this is the standard income statement that the accountants would produce for you. Now comparing that to Africa Eats. So I don't use QuickBooks for Africa Eats. Africa Eats is my investment holding company. I don't use QuickBooks for any of my for-profit companies. I just use Excel. I just use a spreadsheet. And so I'm going to pull up the spreadsheet for Africa Eats from scratch. There it is. This is a list on this tab of every expense, every income and every expense. This is just the general ledger. And so you can see the last thing we did was spend $11,000 on solar. We repaid $100,000 to an investor. We paid some people. We made a $45,000 investment in one of our companies. We spent some fees. We got some income. Okay, just general stuff. It's an investment. It's not a company that has daily transactions. It has a few transactions per week. But the key part of using the spreadsheet in this fashion is, here's the P&L since the beginning of time. This is the income statement for this business. And it took me one click to get to it. I didn't have to go to a menu to find a bunch of reports. I didn't have to jump through a bunch of hoops and figure out I have to set any dates. I didn't have to hit run report. This is a live income statement. It's always live. When you make a change to the general ledger, the P&L changes. And you can see it's split up by annual numbers. And if I click the little plus sign, oh, look at that. I have quarterlies that are hiding underneath it. So how's this business doing? I don't know. We had all of $8,000 of income and $101,000 of expenses. That sounds like it's terrible, except we're an investment holding company. We're supposed to lose money. On this basis, we're supposed to lose money. We made almost $500,000 of investments, but the most important thing is we brought in $1.1 million of capital to go do that. So in terms of cash, we're up. So this is not a standard income statement. I'm going to show you this elsewhere in a second. This is the style.
Just to interrupt really fast, before we go on, I have a little poll about who uses QuickBooks or financials. So I just launched that. So maybe people can answer the poll while you continue chatting for a few more minutes.
Great, thanks. Except I can't see the screen now.
Oh, I didn't know. Can you make it so you can see the screen?
All right. Oh, I just hit go away. Okay. All right. So in my version of an income statement, the style of report that I am going to teach you in a minute for financial models is the same style I use for actual financial reports. And it's in the style of income has a block, expenses, fixed expenses has a block. If I had a business that had cost of goods, that would be up in the income statement. Then we have a net income, or the bottom line, which is in the middle in my case. Then taxes, which we haven't paid yet, but we will be soon. Then underneath that, there's more. That's generally where an income statement would end, with taxes and depreciation. But what I include underneath mine is a few more blocks. One of them is long-term investments. Capital expenses is usually what you would have here for your business. So if you bought a truck, that would go down in this block. If you purchased a building, or if you purchase a machinery to do processing for your work, or a nursery, like things that are going to last for more than a year, that would go in this block. In this case, it's equity and loans because we're an investment company. And then the last block is money that comes in not from customers. So this is equity investments from investors, debt from outsiders. I have a line for repayments of that debt. If you had grants, they would go down here. Grants don't go up in the top. They're not income. They're not from customers. And then at the very bottom, we can compute how much cash whether or not we're cash flow positive or cash flow negative. And that's the style I like. Someone asked why Excel instead of QuickBooks. Because it's so much easier. Because literally, if I had an expense today, I could just say the date. I could type in a code on what it was. Let's just say it was operations. I could say land accelerator sample. Who'd we pay? We paid Amanda Gantz. How much did we pay her? Like in or out? I don't even use debit or
Oh,
credit.
like $1
Out.
million,
All right.
please, thanks.
We don't have $1 million. We only have 467. So we gave
I'll
her
take that.
$400,000. And the running total now of the bank is in the bank account's 140. And then if I popped over to the P&L, that expense on operations would be there. So I like this because it's really fast and it's really flexible because it's Excel. And so if I need another type of report, as you can see, I'm not going to go through all the tabs. I have a lot of different tabs. I can pull up all sorts of different views of this data. And anything I need because I can just create another tab. But this is just literally every single transaction in or out of the company since the beginning of time. Okay, and I'm going to show one more real quick to show how this can be done in a real business. And I did not know you were talking about Yusuf earlier. And so here is Obama Stove's report back to 2014. And this is in Google Sheets. So I met Yusuf in 2014. At the time, he knew a little bit about financials. He knew that he needed to spend less than he earned. That was clear. But he didn't know how much a stove cost back then. He just knew how much was spent on sheet metal Google Sheets. He knew how much he spent on sheet metal and ceramics and other parts. And so I showed him back in 2014 how to turn that into an income statement. And so in this case, it's the improved income statement. This is not compliant with the accounting rules because the statements that the accountants produce are not as useful for a company as needed. So this doesn't start with a top line revenue number. This one starts with a top line stove number. So in the month of January in 2014, this company produced 3,836 stoves. And we knew that it had earned a 500,000 birr, right? And precisely 533,204 birr. And so we compute what the average cost per stove is. Average price per stove is. So customers paid us on average 139 birr per stove. And we computed that. You can see the formula right here. You might know what your price is and you can compute your revenues and double check that no one's stealing from you. Like we sold 5,000 units at 100 of your currency per unit. Therefore, our income is 50,000 units, 50,000 currencies. And then you can go look to see if you actually earned the 50,000 currencies. In this case, the stoves vary in size and shape, and we want to know as a metric that we can use to measure the business, what's the average we earned per stove. So you can see it goes up and down. And then we know what it costs to make the stove. We know all the pieces that went into making the stove that month. And it varies a bit because sometimes we buy sheet metal ahead of time. Oops, I see a formatting error. And sometimes it goes down. But we know the total amount of stuff we put into stoves for the month. And therefore we can compute, again, the average cost per stove. How much did it cost us? And then we can compute a net income off of that. That should all seem totally normal to you, except maybe this unit part at the top. Then there's a bunch of expenses, fixed expenses. And then there's the bottom line in this case, the net profit or loss. And that's it. And then this one ends. This one doesn't have capital expenses. This one doesn't have the income from outsiders. This is a simple income statement, right? Plus this little bit at the top. And the nice part about this is it's all sitting in Google Sheets so that literally we're still using this today. Yusuf just updates it and I can just pull it up and it takes me 3 seconds to pull it up. I'll literally go into my browser and I'll type in Obama and it'll just go to that sheet. And so we don't have to do logins again and we don't have to deal with all the fancy report stuff. What I don't have is the general ledger. I don't have that list of all the transactions. And neither does Yusuf at this point. That we need to fix that. Right, so that's what it really looks like in real world, in real companies. So with that, let me pop over to the chat window. Okay, some people use Wave. That's fine. There's also one called Xero, Xero. Oh, I will show you one more. Hold on, before I jump back over here. There's one more that I highly advocate, which is called Built Accounting. This one's built out of Ghana. Full disclosure, I own a small percentage of this company. I founded and invited it in another one of my accelerators. It's designed by Africans for African companies. It's like $6 a month, and it does most of what QuickBooks does for you. And it's getting better. And if you live in Ghana or Nigeria, it also does things like payroll for you and file all the forms for you. If you live in another country, we'll get to that eventually. But it's a very nice little product. It's builtaccounting.com. There's my ad for the day. Okay, back to this part. Let's just talk about financial reports to jump in and show you what some other financial reports look like. So I showed you income statements from a few different companies. There's three. When I say, as an investor, send me your financials, or if a bank says send you your financials, or a grantor says send you your financials, what they're really asking for is three different reports. They're asking for your P&L, which is your income statement, your balance sheet, and your cash flow statement. And if you're not sending all three, then you're not answering their question, and your odds of getting funded go down. Right. So these are some screenshots of some real financial reports that I got from some of my other companies, and they're a bit dated in terms of years. And I'm going to rant on some of this. So what usually happens is when I or anyone else asks for financials, usually the founder turns to the accountant and says, I need the reports, and tells them which time period, and they pull the reports. And it usually takes days instead of minutes. And it usually looks something like this. This is a income statement that's completely compliant with the IFRS standard and almost useless when it comes to actually running your business. So here we got a company. I don't remember what currency we're in, but we have some revenues. We have cost of goods, cost of sales. We have our net income or gross profit. We have our expenses. And in this case, pay attention to the fact that some of these numbers are negative. Parentheses means negative. The standard doesn't say whether or not you state everything as positives or negatives. So sometimes you have to figure out if that's good or bad. Profit or loss, a positive number is good. Then there's some tax, and we have a profit at the bottom of the sheet. The problem I have when I got this report was, okay, that's nice. Okay, revenues have changed and profits are up. But how many units did you sell? Like, it really bugs me when I get financials and I have no idea whether revenues are up or down because the units are up and down, or the price being sold is up and down, or the complete product changed from year to year. The reports provided by the accountants don't tell us that, and they should. Oh, and just notice that we have, these are notes 4, 5, and 6. So somewhere hiding in this report might be the details we're looking for, but we have to go dig them up. This is a balance sheet. You can tell it's a balance sheet because there's two numbers on the page that are the same. It balances. There's two parts to it. I've seen this in other languages, and I can just tell by looking it's a balance sheet. Now we know we're looking at Tanzanian shillings. Nina, can you mute yourself, please? All right, and what's a balance sheet tell us in terms of useful information for a CEO of a company? Yeah, not much. The whole property and equipment stuff is accounting fiction. There's no use really looking there. Inventories could be useful if your business has lots of inventories. In this case, you can see it went down. Cash is a good thing to look at. This should be the cash in the bank. And then what I'll jump straight to in most of my work as an investor, do you have any debt? I will jump down into the second section down here and look for your loans. And in this case, doesn't look like there are any loans, which doesn't mean there are no loans. It just means there's none listed on the balance sheet. And I will ask, and Amanda's seen me do this over and over again. Do you have you don't have any loans? Right? And I'll ask it in that tone, in that manner, questioning whether this is true or not. Because again, the accountant clearly has made the balance sheet. Almost no CEOs I know even care about the balance sheet, so they never touch that. I didn't flip to my balance sheet tab in Africa Eats because it's not up to date at any given moment. I have to do some work it's not automated. It's in there. It's in the right format, but I actually have to change the formulas in order to get it to update. Cash flow statements, the third one. What's the cash flow statement tell us? It tells us how much the cash has changed in the business. It's kind of like my one-page report, but it's on a third page. And it has all these other pieces to it, including a whole bunch of things about depreciation, which isn't real money. And so I don't actually use a cash flow statement. It's really, really, really rare. I've been doing business for 30 years. And I think twice in 30 years have I looked at a cash flow statement. It's a part of the standard reports. It makes sense for a large company, and it's just not that useful for small companies. So I'm going to move on. There is another report that there's a report that you should be getting from your accountant, which is actual versus budget. So I'm not gonna bother to ask in the chat window because I know what the answer is going to be. But the question would be, how many of you sat down in December or maybe January and created a budget for the year, created a forward-looking financial model for the year 2022 with every line in it, that would be in your line of at least your P&L, your income statement, and predicted on a monthly basis how much income, how many units, how much income, how much expenses for everything in your business. Right. And if I did this poll, maybe 10% of you would say yes. If you want to have a really strong business, then you should join that 10% group. We should flip it around and it should be 90 or 100%. So this is a budget from an actual company from back in 2018, or sorry, this is an actuals versus budget. This is a variance report is what we would call this. And so in this report, and it's still not perfect here, but it's better. So in this report, we have, here's what happened in the months of May and June. Why it's 2 months? It's probably seasonal. So it starts with units. It's great. So this company produced 8,410 units in May, June, and they were predicting 7,500. So that's a variance. That's a difference of 910. I don't know why sales is different, but sales was different. Okay, so they assumed they were going to sell. Maybe they had some inventory. So they were going to sell 7,994. They sold the 8,410. So they sold 421 more than they expected. None were returned this year. They expected a few to be returned, and they expected I don't know how you have a negative set of units in your inventory, but maybe this is relative to something else. We can skip that. And then they split it up by size. So now we know those 8,410 were these 4 different sizes. And for some reason, we then have a total amount of revenue. So I would love to see what they charge per size, but that's not, I can't see the price here. They didn't bother doing that. But we have the total amount of revenues, and it's up. Again, it's higher than expected by 8 million shillings. And then underneath it, we have the cost of sales. How much did it cost to produce those units? And now for some reason, we have the totals instead of the per units. It would be really nice if this was consistent, but at least we have the numbers here, and we can see how it did. And this goes all the way down. This is the real, I don't know if we have it here. Yeah. So then we have the difference in gross profit, and we have the difference in expenditures per item, including the rent and the wages and whatnot. And so at a glance, wouldn't this be lovely to see this on a weekly basis? Here's how we're doing this week. Here's what we thought, how we were doing. And you can do this report with another column, which is, here's how we're doing. Here's how we thought we would be doing. here's how we did in whatever week or month you want to compare to. I want to compare to this last week or the week from last year, and the variances between those. If you had that report on your desk every Monday morning, just imagine how much better your decisions would be for that week. Or think of all the Tuesday experiments that would pop into your mind if you saw every single item in your business, right? You see that, oh my God, the bank charges are trending downward. That's good. I don't have to worry about those. But my what's higher than expected here? I don't have any higher on this business. This business is running under budget on costs. But if you see one of these, you see your electricity bill popped up by 50%, and you saw that on a weekly basis, you could say, oh, something's wrong. Something is broken and using too much electricity, or that new machine we bought is using a lot more power than I thought. Let's find a way to lower that. Like, as opposed to waiting until next January and seeing, oh my God, look at that. Our electricity actuals for last year was 50% higher from the year before. Let's do something about it next year versus next week. All right, and it goes all the way down to the bottom. All right. So that's a really nice report to have. That's one that I rarely ever see from an operating company, but it's super useful. All right, so a few things not to do in these financial reports. This is one I got, again, these are real financial reports from real companies. You can see this is an income statement. We have income at the top and followed by expenditures. Sales from suppliers, less production cost. We have a teeny, and this is in Ghanaian cedis. We have a teeny little bit of money left over to run the company, which one wouldn't think would be enough, but lo and behold, it is. And we had a surplus at the end of the year. Yay. Okay, so sales were up year over year. Production costs were up year over year, but net income was up, or sorry, net revenue was up year over year. And profits were up slightly. That's great. But we have no details on this. This is super high level. We just have 2, 3, 4, and 5. So if we dig into 2, okay, let's go see the units and the price and all that, but no. So note 2 is just a repeat of the same data with some more words. So I have no idea why the accountant thought it was important to put note 2 in, because they didn't tell me anything. Note 3 is direct production costs. Remember, there was 2 and then 3. This is supposed to be cost of goods. This is supposed to be anything that is spent in order to produce one more unit. So in the case of Obama stove, this was the ceramic combustion chamber. You can't make one more stove without one more combustion chamber. In this case, we have marketing and branding. Well, yeah, whatever this company makes, you can certainly sell one more without spending 7,000 cedis on marketing and branding. That doesn't belong here. That's in the wrong section. This is a fixed expense. This is not a variable expense. This is not a cost of goods. We have packaging, production. That's a cost of goods. You make one more unit, you have to package that one more unit. Wages to the women may or may not be in the right place, depending on whether this is wages for packaging or wages for something else. Maintenance is definitely in the wrong place. That's a fixed expense. And the purchase of materials is probably in the right place. So some of these are in the wrong place, and therefore the numbers are slightly off on what reality is, but in the end, it doesn't really matter. But it's neater and cleaner, and you will get dinged by the bankers if you send them this report. They'll go, you don't know what you're doing, right? You stuck maintenance in your cost of goods, therefore you don't understand accounting, therefore we're not going to lend you money. It could be that rough. All right, and then we get down to the general administration expenses, and so now we finally have the details, and we notice down here that there's another line for maintenance. So maintenance is repeated twice, and so now I don't know if this is inclusive of that other number, or how they split it out, or why they had 2 different numbers. And so simply sending me the financial report suddenly opens up a can of worms, as we would say, and it has a question that I would ask this entrepreneur Why are there 2 lines for maintenance? Let's talk about all the maintenance you do. And now we're talking about maintenance instead of something important about their business, just because of the financial report. And then note 5, again, we have a note and we don't have any information, so that's useless. So thank you for the accountant that bothered to tell us we had financial and bank charges, but still, after the note doesn't tell us what it is or why it was split out from the rest of the administration expenses. I have no idea. I don't remember the answer to that question, but again, it was a question and I had to go and ask the entrepreneur, and we had to spend time on financial expenses and bank charges when that is immaterial to the business. But I had to ask, why on earth is it split out? So notes are not for repeating the number. Notes are for actually providing the details. And personally, I don't like it when they use notes. I prefer when they just give me the details and expect me to scroll instead of expect me to go find the details in another page. But the standard out there seems to be notes. So I live with notes. I want to see units sold. You have to tell your accountant to report the units sold. You have to give the accountant that data because it's probably not sitting in your receipts. You have to tell them, here are the number of units sold. Please put that at the top of the report. And either include the price based on all your actual receipts and making an average, or like I did with Obama stuff, compute the average based on the units and the total revenues. Again, cost of goods is anything used to sell one more unit. Fixed expenses are for anything that is spent in that week or that month or that year, whatever the report is reporting, that's gone at the end of that week or month or year. So rent is gone, therefore it's a fixed expense. Salaries is spent, so it's a fixed expense. Electricity is gone. The fuel for your trucks is gone. This is the expenses you have for running your business, but not the things that last, like equipment and trucks and inventories. And then one thing that I'm not seeing on most of these reports is gross margin percentage and net margin percentage, which is a really useful number to see. So what percentage of your revenues is left over to run your business? What percentage? I don't think that's a question. What percentage of your revenues are left over at the end as profits? And if you compute that number and show it in your reports, you want it to at least be steady, if not improving. So it's nice to have that at the bottom of your report. And the whole point of doing this is to see how your business is doing. Right? Are you profitable? If not, why? If you are profitable, why? What can you do to make the profits better? Either way. If you're looking at these, if you're asking for debt, if you're asking to raise money from a lender in terms of debt, well, they're going to take your financial model and they're going to plug in the debt you're asking for, and they're going to see whether or not those payments fit your income statement, basically. Can you afford the debt you're asking for? So before you just go back out to the investors and say, I want to, $400,000, I need to borrow $400,000 because something you did computed out and said you had a need for $400,000. Okay, well, what would that cash flow look like back to the lender? And what would that cash flow look like in your business? You need to be able to answer those questions as well. Okay, I see a ton of questions. Let me just pop in there for a second. Some people are admitting that they're not good at accounting. Thank you for that. So Amanda's in there. Yeah, this is one of those areas for those of you who haven't studied this before and feel uncomfortable in spreadsheets, and when there's a ton of online classes for learning this. Just go to just Google, business financials, and you will see popping up 100 different classes you can take. You can type in free business financials or free business financial class. And you can, as long as your internet's good enough, you can go and watch a college class from the United States on how to do all of this. And it may take you 20 hours or 30 hours or 40 hours, but it may be one of those, it's a really good investment in time where by the end of the year, if you start now, By the end of the year, you could have the equivalent of a degree in accounting without ever leaving your home. Okay, so in the end, my single page financial report gets summarized into this, this set of items. And so this would be all vertical in one column, but it doesn't fit. So again, units, average revenue, gross revenues, cost of goods, net revenues. These terms have lots of different names. As you saw, operating profit was in one of those that I showed you. They just have a lot of names. You just have to get over the fact that different people call them different things. I don't know why. Accountants just can't agree on names. These are just the names I like to use. So revenues is money from customers. Operational expenses or fixed expenses or expenses is those expenses you have that last for that period of time. And then you have a net income or loss. And then the next block I'm generally calling capital expenses, equipment, real estate, buildings, and so forth. Then investments and loans. There's a variety of ways to doing that. And then one line that I sometimes compute, but I didn't have it in my, I had it in the Africa Eats report, which was net cash increase or decrease. But what I didn't have in the Africa Eats report was the running total of how much cash is in the bank. I'll generally do this in the forward-looking financials. Okay, and then the way you do this in a forward-looking financial model would be to make it one per month. So you'll do month 1, month 2, month 3, month 4, or name them if you want: January, February, March, April, May, June. You'll do it on a monthly basis for the next 12 months, or the first year in business, and then compute a sum at the end. In terms of Excel and spreadsheets or Google Sheets, nothing I do uses anything more complicated than sum if. I use sum, I use count, and sum if, and then equals and multiplication or addition. That's it. I don't do anything complicated. I don't do pivot tables. I don't do the new fancy tables in Excel. I just do sums basically. All right. That's just showing you what that report looks like in terms of formulas. We'll send the slides out, of course. A couple other things to look to do when you're diving into a spreadsheet. For most of the currencies, you definitely don't need decimal points. You don't need pennies in US dollars in almost all cases. Don't include them. There's a way to hide them in Excel or Google Sheets. Just make round numbers. We don't need that level of detail unless you have something like in Obama stove, to keep picking on that one. The combustion chambers cost less than $1. So we need to know if it was in US dollars, we needed to know how much that was in pennies. In Burr, no, we just need to know how many Burr it was. I don't even know if Burr has a subunit. Use commas or decimal points or periods or spaces or whatever you are used to in your culture, so that the numbers are more easy to read. So in the American culture, it would be commas. Okay, this one's a little controversial for African companies. I like to see currency symbols whenever there's a currency involved, as opposed to units, because I really like to see units, and I like to be able to see instantly whether I'm looking at units, like a number of things that got sold, or amount of money that got earned. And so I'm used to, as an American, seeing that dollar sign in front of a number if it's a dollar or something. And I know that most of the African currencies don't have a currency symbol. When I'm doing analysis of African companies, I'll often just grab the rupee symbol from India and just use that for any currency. It doesn't matter. Or if it's Cedis, I'll use the Cedi symbol. And Naira, I'll use the Naira symbol. Or I might do what they used to do in Nigeria, was to use the hash symbol, like hashtag. I just like to see the difference between numbers and numbers of things and numbers of currency. I also like to see all the numbers as positives unless it's a loss. So there was that one report I just showed you where the expenses were reported as a negative and the cost of goods were reported as a negative. To my eye, the way I'm used to seeing this is that negatives are bad. And so I like all the numbers to be positive so that positives are good and negatives are bad. And I don't have to use my mental, I don't have to think about anything to go, was that good or bad? Right? If it's a loss, it should be in parentheses and red, because red screams out, look at me. So I like negatives in red, and Excel will do that if you ask it to. Again, I like to see gross margin percentages under the net revenues. I like to see the net margin percentages under the net income line. And then how do you deal with the fact that there's 35 currencies in Africa? So how do you deal with the fact that I can't think in Ghanaian cedis and Nigerian naira and Zambian kwacha and Botswanan pula and Kenyan, Tanzanian, Ugandan shillings and Rwandan francs and all that. I can just about get through Kenyan shillings because it's generally about 100 to the dollar, used to be, but everything else just looks wrong to me. And this should be the same back to you, is that if I sent you if you sent me all your reports in dollars, but you do your business in your local currency, if you're not exporting, that should confuse you a little bit as well. So the way I deal with that, and I'm sorry I don't have a picture of this, is what I tell everyone is just do your reporting in your local currency. If again, you're an Ethiopian, do birr. Like your report should be in birr because you should be thinking in birr. And then we have two ways to fix that for the other audience. So in this case, when I scroll all the way to the right, I get the annual number for the year. Right. So in fact, if you see this, it's month, quarter, month, quarter. So I have the monthly numbers, the quarterly numbers, and the annual numbers all on the same page. There's lots of ways to do that, but this is not an uncommon way to do it. I have the total number here, and then what I have is the conversion factor to dollars, and I have another column with the same numbers sitting over here, but in dollars. And so everything is just, the formula is just birr times the conversion factor, and I can see it in dollars. That's one way to do it. The other way that I'll often do it is I'll just make a copy of the tab, and I'll call it 2014 dollars, and then I will go through everything that's birr here and have it convert to dollars in my other tab. And so the benefit of that is, so I will be looking at tab 2014 dollars, and Yusuf will be looking at tab 2014 in birr. And the nice part about that is that I can say, okay, so go to cell F12. And when I go to F12 in my tab, I'm seeing dollars. And when he goes to F12, he's seeing birr. And I won't say what the number is, but I'll say, why is that so much higher than it was in April and in May? And I will be able to see what the ratio is, and I'll be able to see whether the number makes any difference. Like if it's a small number, I'll skip it. But we can talk about the spreadsheet where he's seeing it in one currency and I'm seeing it in another, and that's a useful thing for when you're dealing with an investor who's used to a different currency. Okay, and the last little piece here is how to deal with this on a day-to-day basis, even beyond the reports that I'm showing you. And it's a blog post that's sitting on my website. It's called Forget Accounting. And I'll walk you through it really quickly, but you'll get the rest of the details on this page. So it starts with a general ledger, like I showed you at Africa Eats. So we have a date and a type, which is something you're gonna pick yourself, and an English version description of what's going on in terms of that transaction, and a vendor or a who did you pay or who paid you, and then columns for in and out, which if you're used to accounting, you're going, but call them debit and credit. I don't call them debit and credit. That's those are jargon words. I just call it in and out, into my bank or out of my bank, and then a running balance on how the bank account is doing. And so once you've done that, once you have a ledger of your activity, your financial activity, well, then you can compute one of these P&Ls. And how do you do that? It's just sum and sum if. So this is the sum of these two. So how do you do the customer? How do you find out what your revenues were for this category? Well, you just do a sum ifs on the general ledger, column E, from 2 to the end, 2 to many, many, many rows. And what's the ifs mean? Well, the if says I'm going to compare against this column, this value right here. So let's just pop back. So general ledger E, if I go back over here, A, B, C, D, E. E was in. And now you can see I have a text description identifier of what that transaction was. And then over here in the P&L, I repeat that. And sum ifs is going to just grab all the items in that ledger that have this ID and sum them up and put them here. And in this case, in this example, I have customer revenue and consulting revenue, and it'll split those into two. And the same thing it'll do on the expenses, except we're using column F because column F was out. And so it'll add up all the expenses for all the people and rent and utilities and travel. And then net income is just, you know, revenues minus expenses. That's it. That is the math that's needed to go do the reports like I showed you for Africa Eats. Then you can do it per month. And to do it per month, you can do it for every month. You just have to add, you have to use some ifs plural, and I show you in the blog post how to do that. Right. And then if you did this with your budget, you could produce one of those variance reports where one tab is your budget, one tab is your actuals, one tab is your ledger, and one tab's computing your variance report. You could also do it per quarter, and you can do it per quarter just by changing a date on your spreadsheet. You can do it annual by the same thing. You can compare years over years because it's a spreadsheet. You can do anything you want. So to do one of those, you download this accounting template that I have up on the website. You create whatever categories are relevant to you. You create the date ranges that are relevant to you. You can do it per week, you can do per month, per quarter, per year. And then you just put in your transactions and you will have an income statement. It'll just automatically, every time you put in another transaction, your income statement updates automatically. With that, I will open it up to any questions we have in the last 10 minutes.
That was really great, Looney. Thank you so much. I want to let everybody know we did the poll, and I think I can share the results. So I think people are able to see that most people here have been creating profit and losses, 80% of the folks who responded today. And of that, we have 26% of the people who answered the questions are using QuickBooks, 60% a different program. And again, 14% are not yet keeping financials. So that was just interesting to share. Thanks everybody for sharing your thoughts on that. And of course, would like to, again, open it up to anybody who has questions.
Yeah, Emmanuel, go ahead.
Yes, Looney, thank you very much for the useful presentation. I'm still puzzled that you recommend to start running our businesses in Excel. We are using QuickBooks, which has general ledger, which has...
Yeah, if you're already using QuickBooks, you're fine. I'm not saying you should come off of QuickBooks, but most of you guys are not using QuickBooks or Built Accounting or Xero or any of that. So if you're still kind of handing receipts to an accountant, and they're just sending you reports and you're not seeing the details on a weekly basis, then Excel is a good place to start.
Despite your 30-year experience of actually still using Excel.
I literally, the only company that I have any part of on a day-to-day basis that isn't in Excel is my nonprofit. And it was on Excel until January when we hired an executive director. And he says it's time to move to QuickBooks. So he's running the company now, and he wanted QuickBooks. So we spent like 8 sessions, about 2 hours a session, moving everything over to QuickBooks. So it is possible to go back in time. We went back to 2020, and we moved every transaction over to QuickBooks. And it was a useful exercise. I'm not complaining. It just took a lot of time. Bernard.
Yes, thank you very much for a fantastic presentation. My company is called West Nile Foresters. We produce quality tree seedlings and sell to individuals, companies, and government agencies. Now, I've been struggling with financials because we have about 20 different kinds of tree species that have different prices. So to produce financials like this, what do we do? Do we get an average price for those things and the average units sold? So I've been struggling with that. What you're describing works perfect. If you have one or two products, you can be able to get unit prices and units sold and things like that. So we've been struggling with that. How do you advise us? The second issue is
Oh, wait, one
we
at a time,
produce.
one at a time, one at a time, one at a time. I'm gonna make
All right.
you remember the second one instead of me. All right. So in terms of what I would do if I were you, is I would have a tab that was just income, that was all the details summarized by species. So I would have a tab of sales that would show me the unit sales and the average price per species of 20 or 30 or 50 or 100, whatever, however many products I was selling. And then my tab that was my income statement, the P&L tab. And I use P&L as the tab name because it's shorter. My P&L tab would then summarize that into one line of here's my revenues and average for all. Here's my total units and average across all the different species. So I would be able to dig into the details when that was important to me, but on a accounting reporting basis, I would probably just be doing the total units and average of all of them. And so Obama Stove's not that bad in terms of 20, but I think he's up to like 4 or 5 different stoves that he's selling. Could be a half dozen. And the report is still saying number of stoves and average price. And I would love to see the one level deeper report, but he's not producing it for me at the moment. Okay, you have a second question.
Yes, because we produce based on seasons, there are some months like dry season from around December up to April, we don't make sales because dry season. So if you do monthly projections, that means there are periods we're just spending money and we're not making money. We sell between May and September. The rest of the time, we may not have income.
Yeah, well, different businesses have different seasonalities, and this is just the reality of your business. It's totally fine if in your budget and your financial model looking forward, you say we don't sell in December and January. That's zero, and here's the expenses we still have to pay. The rent doesn't go to zero usually. The rent isn't usually seasonal. Salaries usually aren't as seasonal, but income can definitely be seasonal. If I were running your business, I would definitely have a budget that showed that, so that when December rolled around and my income dropped, that I would be able to turn to my my partners or my investors or whoever I'm sharing this with, or my team, my management team, going, okay, well, revenues were down for this month versus last month, but that was expected and planned for. And look, we're doing okay. Right? We have money in the bank to cover that. It's also important, like when you're comparing one week or 1 month or 1 quarter to another, once you have a company that's been around for a few years, usually what you'll do is you'll compare to the same week, month, or quarter from the previous year instead of the most. So for instance, it's May 10th. And if the company is like 2 years old, I may say, how was Q2 versus Q1? But if a company were 3 or 4 or 5 years old, I would always say, how is Q1 compared to Q1 2021 compared to, sorry, Q1 2022 compared to Q1 2021. And then I'm going to want to see Q2 of this year compared to Q2 of last year. And maybe even, the last 2 years going backwards. I'm going to try and compare like with like. And so I'm going to look back a whole year. And if we're doing this on a weekly basis, great. We're in week, I don't know, we're in week what, 20 of this year? 18? And so I want to compare week 18 to week 18, right? Year over year. Kevin, you have a question?
Looney, for the great insights. My name is Kevin Kibuka. I am a founder of a company in Kenya called Vokenel Enterprise. We deal with Baobab products. My question is, you've mentioned different types of systems that we can use. Are there like phone applications, especially for Android, that you would recommend? Because I've been looking for them on. I've been looking for them on the Play Store, but they are not up to speed to some of the things that I want them to like to do. So, is there a specific phone application that you'd recommend?
I have not seen, I don't think accounting can be squeezed down onto the size of a phone. I think the amount of detail needed is going to need a screen from a notebook. I know QuickBooks has an app. I don't even have it on my phone. I'm sure that some of the free accounting software has apps on phones as well, but I've never used them. Part of that is I'm American. We're notebook centric more than phone centric, but I'd just be dubious that you could see enough of your reports on a phone screen to make use. So I would highly advise you to go buy a cheap notebook and just do it off of a notebook.
Okay, then.
Hussein is next, and feel free, everybody, to do your one line pitch as opposed to your hi, my name is and I run a company such and such. So Hussein, you're up. You're on mute.
Hello. Hi. Was that me? Who was next?
We're doing Hussein next.
Hussein
forgive me.
Khalil. Who's still on mute? There you go.
Can you hear me?
Yes, go.
Yes, Looney, thank you very much. I really enjoyed. I work for non-profits and I never go into details of accounting. I just oversee. Now from non-profit, we are moving into income generating. And we started with veterinary services. We provide service, we treat animals, livestock, we sell drugs. And we have project in 5 different districts in Ethiopia. My problem is how to control, how to get data every day. We don't have a system. We are just keeping record on papers. And can I have a system put in one place, or can I have an app where I get sales every day and see how the business is going? The next question is, we are selling different drugs.
Oh, I'm gonna make a rule, one question at a time. You can have 2 questions, but just give me one at a time here. All right, so the question is, how do you get off of paper and into an electronic system, right? And just because I'm old enough that we didn't have, we had the first spreadsheet when I was about 10 years old, as I had that in my home computer, a pirated copy of it. But I'm old enough that when I was a young child, every business was doing accounting on paper because that's the only choice. So you had mainframes for giant companies, but every normal company was doing accounting on paper. And my grandfather ran a store. That was his family business. His father had started the store. And I remember him at the end of every day, he would run through, he would literally have, that was before credit cards were popular as well. So he would have piles and piles and piles of actual paper money at the end of the day. And every day he would go through and he would count up how much money was in the cash register and add up how much money, how much stuff had been sold, because everything had a receipt. And he would, do the books at the end of the day. That seems to be that ethos of closing the books at the end of the day seems to be lost now that we have computers. Like, we just expect the accountant at some point to get everything up to date, but I don't. So that spreadsheet from Africa Eats that I showed you was absolutely up to date. It has every transaction that the company has done. through today, we haven't done any today because it's my morning. But whenever there's any transaction, I go in and put it into the system. So one thing is I don't have an accountant. I'm not handing them and not sending them an email saying, please update the system. I'm doing it myself. So there's up to date. And yes, we don't have a lot of transactions. But again, if I were running a business that had selling things in 5 districts across Ethiopia, and I was trying to keep track of what was going on, then I would have a process that at a certain time of day, at 4 o'clock in the afternoon, this one district would call me on the phone and read me the sum of the day's sales and expenses. And at 4:15, the next district would call, and at 4:30, the next district would call, and we would just keep doing that. Maybe it's between 5 and 6, or between 6 and 7, or maybe it's simple enough that at 5 p.m. everybody texts me or WhatsApps me, 3 specific numbers that I then have inserted into the spreadsheet. And this is again the difference between doing it in QuickBooks, where it has to be in a certain pattern, has to have certain details in it, and doing it in a spreadsheet that can be anything you want. Anything that's important to your business can be done in a spreadsheet because it's just cells. You're defining what you do with those cells. So I would at least have one at the end of every day, a text message coming in that then gets transferred into Excel or Google Sheets. And if it were big enough business, I would have my financial person receiving those messages, putting them into the system. And then before I went home at the end of the day, I would be looking at those numbers. Or the first thing in the morning, I would be looking at those numbers and seeing how we did yesterday.
Thank you very much. The problem is again phone, so I'm happy to hear from you.
Yeah. Okay. Did you have a second question?
My second question is, we sell a variety of drugs, up to 40 items. And we charge also for the service when the veterinarians provide service to the farmers. Can you make average of all these, or we list one by one item?
You can, but this is a good example of where sometimes your revenue section shouldn't just be, total units and average price. Sometimes your revenue section is going to wind up being a page or 2 tall, because you're really going to split it into products and services, or 3 different services, or small, medium, and large might be important to you. Probably what I would do in your business would be a revenue section on the drugs. So number of boxes sold, average price per box, total revenue for drugs, and cost of goods underneath that. How much did it cost me to go get those drugs? Anything else related to that, net revenue for the drugs. And then underneath that, an entire new section of revenue just for the services. Okay. How many vet consultations did we do? What was the average income for each of those consultations? What was the gross revenues for veterinarian consultations? Was there any cost of goods related to that? Maybe I got to pay the vet per consultation. Maybe I pay them per month. And then underneath all that would be total revenues. So sometimes splitting it up that way to that level of detail, and sometimes it's small, medium, and large. So we sell 3 things. We sell the small one, the medium one, and the large one, or the low price one, the medium price one, and the expensive one. Or sometimes it might be regions. You said 5 regions. It might be that we split up the revenues by region. Region A, region B, region C, region D, region E, all get split up on the revenue chart so that we can compare them to each other. So we can see how our net margins, or our gross margins are per region. Maybe that's it. Maybe they vary and we want to not make them vary. Or maybe we want to have them compete against each other, because that will get them more motivated. So we split them out on purpose so that they're more motivated. And sometimes not. Sometimes we don't care that we're in 5 regions. We'll just all collect those together. These are all the decisions you have to make running your company. And I can't tell you what the right answer is for any one company.
Thank you.
Okay. All right. Next is Awur. Awur.
Yes, Looney. Thank you so much for the presentation. I have really learned a lot. And I am just a bit confused because I have seen different accounting systems. I just wanted to ask, which one for a startup, if you're not a financial person, would you recommend for a startup as you build on to the other ones? Or why is it important then to have all the different accounting systems that you're using?
Okay, so there are different, there are different accounting software and solutions out there because different people are more comfortable and with accounting than others. So QuickBooks again is the most complicated one that any company on this call is probably ever going to use. There are even more complicated systems than that. So if you are completely comfortable with financial reports, if you have a financial person on your team who's generating those for you, go for QuickBooks if you can afford it. The next level down from that would be the free systems like Xero and Wave that try and do everything QuickBooks does, and they try and do it for free. But again, they're complicated. If you've never done this before and you're just trying to get into you're trying to get to the proper accounting reports, then go look at Built Accounting. It's much simpler than QuickBooks, and there are actual human beings you can talk to, and they'll help you through it. Then if you want to go into the path that I like to do, which is running my businesses using numbers, then this is why I use Excel, because it's much more flexible. Because I can make Excel do whatever I want it to do and make it tuned to my specific business. And I just like the fact that it's quicker. So I don't have an accountant on the side doing the accounting for me. I'm literally running a half a dozen businesses where I'm the CEO and the accountant. And I'm able to just drop in these transactions in seconds because I can just pull up the spreadsheet and drop it in and then go look at the financial reports when I need to. So I like Excel for the reason of flexibility and speed. And I am I've been using a spreadsheet since they've been invented. So spreadsheets don't intimidate me. You can learn as you can be an expert on spreadsheets this year if you want to as well. If you search for free lessons in Excel or free lessons in Google Sheets, you will find hundreds and hundreds of online lessons for those. So that's why there's a whole bunch of choices out there. Okay, who's saying you can drop your hand? You lower your hand so that you're not on the list anymore. Ibu. Oh, sorry, Ibun. Oh.
Yes, Ebon.
Ebon.
And is silent. Yes. Thanks a lot. This is a great class. My name is Ebon Feludu, and I run Jam, the coconut food company. We're Africa's biggest integrated coconut processing company. And one of my attractions to the coconut is the wide range of products that are in such high demand, which we've also grown to produce. So we're 6 years in now, and we produce a range of products. But what attracted me to this program was, basically land acceleration, because we are now planting. We've now started planting coconuts. So my question is, so our products are things like coconut oil, coconut cinnamon balls. We also, make cocoa peats. We make bowls out of the coconut shells. And then we're now selling seedlings and also planting. So my question is it necessary for us to sort of divide our accounting books based on like the different divisions, if you will, of the company? So maybe like the seedlings and the planting, should that be separate, and products separate? And then we have things like the bowls and the cocoa peats, because we're actually working with the community on how to turn more of the shaft, which is a huge waste to the coastal communities, and turn them into cocoa peats, which are in high demand and mostly imported. So should we divide the books?
All right.
Or keep it all?
I can't answer the question. You're the only one who can answer the question. But if you were coming to me asking for equity or debt investment, one of the questions I would inevitably ask you, which is, what are your 3 biggest products? And you're either going to answer that off the top of your head because you know what the three biggest products are, because that's just, those are the products that you have to pay attention to every day. Or you're not going to know. If maybe I'll say, can you list 10 products you make and rank them by net margins?
By the margins.
Yeah, by the margins. So which products, not do you make the most money on, but which products are the most profitable? And so if I'm in that mood, if I'm in a mischievous mood of due diligence, I might try and I might ask that question for two reasons. One would be because I'm curious, because I've not dealt with a coconut company before, and I just want to learn. And so I want to know, what products do you make out of coconuts that are meaningful? So I might ask two versions of that, which is, what are the top 3 products in terms of revenues? And then what are the top 3 products in terms of margins? And so if you're not computing that, if you don't have that extra tab that someone else was saying for their 10 varieties of plants or 20 varieties of plants, so if you're not computing down to the level of margins per product, you're not going to be able to answer the question. You may not get the investment. But secondly is, well, that's not a bad question to ask as a manager of the company. So if there happens to be a low volume product that's making a huge profit, and Amanu has been chatty in the chat windows. I'm not going to call on you, Amanu, but I'll point out his business. He's running a honey company, but when he pitched it to me, I know Amanu from years ago. When he pitched his honey company to me, he didn't pitch a honey company to me, actually. He pitched a bee venom company. He said, I want to make bee venom because it has all these benefits. And I'm like, I never heard of bee venom. I said, you're gonna grow all these bees and you're not gonna sell honey? Like, I know 100 honey companies. I don't know any bee venom companies. Why bee venom? And his argument back to me was because the margins are incredibly high. Because you do such and such and such, and you get bee venom and it sells for like higher than gold. And I'm like, oh, that looks good. But you would wind up with all these bees. Shouldn't you sell the honey too? How much would the honey be worth? And so it's a honey company now too. So the same thing might be true. It's probably not quite to that level in a coconut thing, but it might be that, extracting such and such out of the coconut is just so profitable that you should focus more on that. And you won't know that unless you actually compute the numbers. You may just look at it and go, well, yes, it's like 2% of my revenue. It doesn't matter. We'll just do it because we can. But meanwhile, it might be, twice as profitable as the coconut peat. You also might discover, I want to go through this one. There's another company I'm working with. It's not in this crowd. They had a hiccup last year and they made a call out. This is Africa Eats company. And they said, oh, we need some money right now because we're losing money. And I said, okay, well, your company has 5 things that it sells. What are your margins on each one? Which one are we losing money on? Like literally. And it took us 2 months to get an answer to that question. And if he had just simply answered it that day and said, well, okay, well, I'm not going to out it. So, on product A, our margins were fine. There were 30% before the pandemic. They're still 30%. And on products B, C, and D, we're down a little bit for this reason. And on product E, we're losing money. And that's why we're losing money as a company. Like, that's the answer I was expecting. And instead I got back, I don't know. I'll ask the accountant. And then we asked the accountant, the accountant's answer was, I don't know. I'm like, how can you not know where you're making money and where you're losing money? Like, you're telling me you're losing money, you need more money. I can't give it to you because you're probably just going to lose it. You don't know where it's going to go. Like, you need to be able to report that to me. We found it out. It was 2 months later. We had to do all the accounting. Okay.
All right. Thank you.
Thank you. Joseph's next.
Thank you so much, Luni. This is Joseph from MotoFeeds. We are in Kenya. The information you gave us has been very useful for us, and I have a question regarding the currencies. You advised that if you are reporting, you need to use your local currency. That will make your reporting much easier. So my question was, what if you are supplying to different countries? Would you report on the country that you are supplying most, or what is your advice on that?
It's a complicated question. It doesn't have a single answer. I've seen, so a few of the companies in this cohort mostly export off the continent. So they're being paid in dollars or euros. And so if you're mostly being paid in dollars, it's fine to do your accounting in dollars. If you're mostly being paid in euros, you can do euros or dollars. If you're exporting to neighboring countries, now it gets complicated. So I would say do your reporting in whatever currency you're mostly receiving money in. Yeah, revenues is I think the driver to me on what to report on versus expenses. Your expenses are going to almost all be local currencies. All the currencies are all moving against each other. So if I were trying to do this, I would most likely have, I might go to the detail of saying, here's how much I earned in, and then name the currency. And here's what the conversion factor was from that currency to my reporting currency for this time period, for this month or for this quarter. Here's the average because it changes every day. And so therefore, here's how much I'm reporting in my local currency or my reported currency. And then continue on in one currency. Because we've seen recently in one of my funds that I'm running, we've seen cases where a currency has changed a lot in the last 3 years. And so they're reporting to us in their local currency, and the numbers are going up and up and up. But in reality, their sales are about the same. It's just that the currency is devalued. So it's nice to have that conversion factor lying around, or the in the case of when I'm doing this in dollars, it's always visible. It really matters on the business on how many different currencies you're dealing with and what percentage of the total revenues that is. And I'm sorry there aren't clean answers to most of these questions, but this is accounting. None of the, let's just say this, none of the numbers in the reports are actually totally accurate. Right? It may be accurate to the unit of currency, it may be accurate to the shilling, but the shilling's changing in value as we're going along, and it may be accurate to the SETI, except you had 10% of your money came as imports, or you had a grant in euros, and therefore that line in your line in on your investment side that said I got a grant of this many SETIs isn't actually true, because that's how many SETIs went into the bank, but that's not actually what the grant was. So accounting is always approximate. Accounting is never perfect. Okay, we're going to do try and get through the last 3 before the top of the hour here. So Clinton.
Yeah, thank you so much for the program. I think I just want to appreciate the comment and also an advice to my colleagues. Most of the times, if you want to engage with investors and the donors, what they request is the financial viability as well as also job creation. So financial viability, you have to make sure that all your proposals, they explain the revenue streams, the expenses and everything just the way the facilitator has explained. On the other side, the most interested part which they get into is the social inclusion, where they'll ask you about how are you going to generate income, how are you going to be paying your workers, so that they make sure to say your business is sustainable and also viable. It's just a comment which I'm giving for like considering the interest and the needs of donors and investors. Thank you so much.
Okay, thanks, Clinton. Mayimbola? No, Mayimbola. Mayimbola. Muto.
Okay, Moto. Good
Hello.
evening, and thank you very much for this presentation. Mine is a comment. I wanted to comment on the previous 2 speakers who were asking about the various products that they are offering. Yes, I wanted to share to say if you have more than one product, it is important to have management accounts that segments the actual products, product by product. But in the main financial reports, you just prepare one financial report covering the overall performance of the organization. But in the management accounts, that's where you are going to specify how each product is performing and how much revenue it's bringing and how much expenses it's incurring. It's important to segment so that you tend to know which product is profitable and which one is not profitable. Because in the long run, if you are just running all the products without documentation, you'd realize that the other products that are not making any money, they are going to be sustained by the other products. In the end, they are going to be eating in the overall company profits. So it's better to segment so that you are able to account for it properly. Thank you.
All right, thank you. Okay, and last one of the day is Cujo. You're on mute.
Cujo, you're not on mute anymore, but we can't hear you. So while you're looking into that, I do want to remind everybody to fill out the attendance sheet. Yes, Cujo, we can hear you now. So fill out the attendance sheet. Oh, we've got that in the chat box. Go ahead, Cujo.
Do you hear me?
Yes.
Yes.
Do you hear me?
Yes.
You hear me? Are you hearing me? Hello?
Hi, we can hear you just
Hello?
fine.
Okay. We are from Kontiki Bamboo Works Limited, and we are doing a whole value chain from bamboo, from nursery to plantations to now starting productions. Now, our problem is that our capital investments are coming from personal revenues and from other businesses. Now, we haven't started making sales. If I'm making my books of accounts, profits and losses, and I know in the future, in the next 2-3 years, I should be able to start making profits or start selling. How do I do my business to be viable for this kind of project?
Okay.
We have over 500 acres of bamboo, for instance, which is more ready for carbon smallholder trading with other potential buyers or trading with us in business.
Okay.
Thank you very much.
Thank you. So one thing that I didn't point out that we should point out here is the importance of even if your business is just in that early mode where you've planted something but you're not earning revenues, you can still produce books for that. You just don't have, you literally have 0 revenues at the top of the page, but you still have expenses. You still have capital expenses. You still have income or cash that has come in from outside. Which reminds me that it's really important, if we haven't said this before, it's really important that the business not be mixed in with your personal finances. That the business have its own bank account, that money that's put into the business from you or your family or your friends is booked as income, as if it came from a grant or investors. Like it needs to be put in the cash flow statement in the balance sheet as investment. It just doesn't show up. It just doesn't appear from nowhere. Your accountant will know how to do this. And it's actually helpful to a business that isn't earning revenue yet, but will eventually, in a year or two, to have books from this point. Because when you get to the point where you're ready to get an investment for equipment to process that bamboo, and an investor says, well, can I see your last 3 years of financials? It's a much better answer to say, yes, here they are, than to say, well, we weren't earning any revenue, so we don't have them. You will have a much higher chance of getting that loan or getting that investment if you can just turn around and say, great, yes, we planted 3 years ago, here's 3 years of financials to show what we've put into the ground. And in terms of standard financial reports, it will show a balance sheet of growing value from the value of those bamboo plants. So somewhere in there will be hiding the value that's been planted in the ground, whereas the income statement will look terrible because it has no revenues. So yes, please do your accounting now anyway. Okay, and with that, minute early to hand it back to Amanda.
Thanks so much, everybody, for all these questions. And thank you to Looney. We can go ahead and let you go now. We will be having on Thursday a panel of 3 speakers talking about nurseries, their businesses that they develop. So we want to encourage everybody here, if you've been thinking about starting a nursery, or if you have trees in your business model and you're partnering with a nursery right now, you might be thinking, should I plant a tree or not? Or you might just want to hear about the business of growing trees. How are some people making it work for them? There's going to be 3 different business models represented in our panel. So definitely invite you to join us 2 days from now at 6 p.m. Kenya time to learn about trees. We've got some of our own actual speakers from this actual cohort presenting, and we are going to put the presentations onto Mighty Networks as well as the recordings. So we welcome everybody. Samuel, do you have additional closing remarks for us?
Not really much, but just to thanks the team for holding on. I know finance and accounting can be a bit technical, but at least you have a gist of what really happens. Yeah, so feel free to share the recordings with your financial or your accountant expert, just to be able to go through, and I'm sure you'll be on the same page. Otherwise, thank you so much for holding on, and see you on Thursday as we talk about trees. Thank you.
And I agree with Samuel. There are so many ways to do these financials. So thanks for inspiring us, Samuel. The important thing is that you up your game, that you are on top of it. So whatever that means for you, I know for me as a business owner, I actually started with a company similar to Built Accounting that we have in the US. So if you are feeling a little not confident at all, I would highly suggest you go ahead and check out that website and try it out, because I needed hand-holding at the beginning as well. So I just wanted to share that as my personal testimonial as well. That sometimes you need hand-holding, but if you walk with them, you will learn and become proficient in your own financials. So thank you all so much. This is a building block for financing, and that is, of course, where we'd like to get all of you. And have a great day. We will see you on Thursday.
Thank you.
Bye. Thank you. Thank you. Bye, everyone.
Bye.
Bye. Bye.
Bye. Bye. Bye.
Bye.
Bye. Thank you.